Buying real estate and renting it out is the oldest and most basic way to invest in real estate. Nothing wrong with that. It can be a very lucrative investment strategy. But some people shy away from the time, money and effort this traditional way of investing into real estate is costing them. So let's look at 5 different, more simple and more affordable ways to invest in real estate here in Germany.
Perfinex. Personal Finance for Expats.
What's up everyone? Welcome to a new real estate video from Perfinex. Today with 5 simple and affordable investment possibilities in real estate that everyone can do if he so chooses. Almost no preconditions in comparison with buying a rental property in Germany. By the way, we're only talking about real estate investing today. If you're not sure if you want to invest in real estate or if you'd rather buy a home for self-use, you'll probably want to watch this video first. Links in the description. This will help you make up your mind. And if it doesn't, feel free to reach out and we will give you our honest opinion if we think buying or renting is better for you. Alright, let's see why buying real estate in Germany can be difficult. Here's the preconditions of traditional real estate investing. They only apply, of course, if you need financing from a bank. Which you probably do, because real estate prices here in Germany have been going to the moon. And even if you don't need a loan, it's probably a good idea to get one anyway. With the current interest rates being near zero, mortgage rates are also around 1% right now. Maybe even a little lower if you have a solid financial situation. And that's free money as far as I'm concerned. If you apply for real estate financing, you first of all need to cover the additional purchasing costs, which are around 10% of the property value. There's the notary, ground taxes, ground book, and maybe a real estate agent if you need one. If you buy a property here in Bavaria without a real estate agent, it's only 5.5%. But still, you need to pay it in cash. No bank will finance this as of right now. It also helps if you have a 10% down payment. Some banks just don't finance 100% of the property value anymore. And just this fast, we reached about 20% of the property value you have to have in cash. That can be a lot of money. On top of that, you need to be considered creditworthy by a bank. High income compared to your expenses, unlimited job contract, no probation period, low debt, ideally high assets, good Schufa score. What's Schufa? Here's a video explaining you how important the German Credit Protection Agency is, as well as Schufa mistakes and 10 easy tips to increase your Schufa score. And you need to be willing to commit for the long term, ideally for 10 years, because only after that period you can sell your rental property completely tax-free. And you need to be willing to accept a lot of risk, like a lot of risk. Because you're highly leveraged. If you put up 10% as a down payment, you're getting 90% of the property value from the bank. What happens if you want to sell your property and you only get 80% of the value? The bank always gets its money. Have you heard the sentence before? And after being in this business for many years now, I can assure you it's certainly true. The bank will find a way to get their money. Now you might say,
but Axel, real estate always rises in value.
Really? Ask the people who invested before the global financial crisis, just a little over 10 years ago. And that's just the preconditions before you buy a real estate investment. The work doesn't stop afterwards. Somebody has to manage the property, find new tenants, repair stuff that breaks, do the additional tax work. Of course you can limit this to an absolute minimum if you buy a property that is specifically built for investors, like our property portraits. We're part of a network of the 40-50 reliable property developers in Germany that build or renovate specifically for real estate investors. And every once in a while, when an exciting property appears, I'll make a video about it. You can find the link to our property portrait playlist in the description. And you're not really diversified either when you buy one investment property. Even if your property is fine, you still have the location risk that can hurt you big time in the long run. Is traditional real estate investing a bad idea now? Of course not, because you get a lot of benefits that you don't get with the 5 other ways we'll talk about in a moment. You don't get the tax benefits, no tax deductible costs, no depreciation, no nothing, and you don't get the leverage with the bank loan, which is an awesome tool if you use it right. So there's no best way to invest in real estate. They're all good. Question is just which way fits you the best. Alright, let's see the 5 ways to make money with real estate that don't require a lot of time, money or effort. They're really simple and really affordable for everyone. Option 1 is a real estate fund. If you have a bank account with a traditional German bank, the sleazy bank salesman probably told you to get one of these real estate funds before. Be aware of that. Also be aware of ship funds, airplane funds or wind park funds. They're all the same. The argument is always that you get some form of tax benefits, which is most of the time not even accepted by Finanzamt anymore. And the second argument is that if you don't like them, you can sell them instantly. Just ask the people who bought these before the global financial crisis and they will tell you different. In theory, you can sell them. That's true. Until too many investors want to sell and the fund company closes the real estate fund. As you can imagine, this is the worst of the 5 options. You can also invest in companies that are in the real estate industry. You can buy shares of a real estate company directly, but then you lack diversification again and have the cluster risk. You can buy a real estate ETF that is more diversified, ideally worldwide, or you invest in a real estate mutual fund that is managed by a professional fund manager. If you're not sure what the difference between an ETF and a mutual fund is, check out our free Investing in Germany master course right here on YouTube. Links in the description. As all of these 3 investments are traded on a stock exchange, the value can and will fluctuate a lot. Be aware of that and don't panic. And you can choose if you want the rental income paid out to you or if you want the companies to reinvest the rental income. If you like passive income, you will love option 3, the REIT. REIT stands for Real Estate Investment Trust. A very unknown concept to many people. It works similar to a real estate fund. An investment company pools money from investors and buys real estate with it to rent it out. Ideally worldwide again. The rental income gets distributed to the investors. Guaranteed. Because in order to maintain the REIT status, the investment company has to pay out at least 90% of its taxable profits to its investors. Benefit is that REITs don't pay any corporate taxes. Taxation only happens because you have to pay capital gains tax. This is as close as it gets to purchasing real estate directly. If you're willing to commit long-term with your investments, which is a good idea anyway, because investing is a long-term game, you can also join a real estate partnership. Now this is a very exciting new way for private investors to participate in the professional real estate investing strategies that are used by the large institutional investors, pension funds, investment banks, insurance companies. And since a couple of years, you can join their strategies as well with a real estate partnership. Works very similar like the REIT again. An investment company pools money from investors and you can buy a portion of it and become a partner. Before you do that, you should decide if you want to join a partnership that has a diversified approach that basically buys a whole city across the world, or if you want to join a partnership that has a focused approach and invests in prestige buildings. Like these 2 real estate partnerships that invest in the big red office tower in Chicago or the so-called Gucci building in New York City. Both investment opportunities are not available anymore. They're just examples, so you know what's possible. And second decision before joining a partnership, do you want passive income? Meaning the partnership distributes rental income. Or should the partnership reinvest it? You can also do both if you have the money. And last but not least, option 5, real estate crowdfunding. Please be aware that this is super risky. It is basically some online real estate platform that connects property developers with investors. So if a property developer needs money to build or renovate a property but doesn't get money from a bank, he can fund his project through the crowd. And investors can be the crowd and invest little money in these projects through whatever online platform. In online advertisements, you see astronomical interest rates of 10% or sometimes 12% per year that are super secure, of course, because there's a property backing the loan. I think we can all agree that 10 or 12% interest rate don't come for free. There has to be a tremendous amount of risk involved. And that's why I'm currently testing this with my own money to see how it works. It came okay-ish through the pandemic, but it's not over for now. We'll see what happens. Let me know in the comments if you want more information on this. Let me also know what you think is an exciting option for you to invest in real estate. And if you're not sure which option is right for you, feel free to reach out and we'll find out together what fits your life the best. Hopefully, this video helped you to see that there are many exciting, easy and affordable ways to invest in real estate. If you want to know more about one of the options or on real estate in general, let me know in the comments. See you next week, party people.